Hey, I'm McDonald, your real estate agent with Real Property Associates, and today I want to talk about the most common down payment amounts. I frequently talk to home buyers, and I do a lot of work with first-time home buyers as well, and so this conversation of down payment comes up a lot. Questions are things like, Zach, how much should I put down on my house? Or, Zach, how much do I need to put down in order to purchase a house? Those are the most two common, I'd say, out of all the questions, but people are always asking me, Zach, okay, this is my situation. They might paint a picture of it, and then just off the cuff, like, how much do I need to put down? And there are a lot of different factors. If you talk to a mortgage lender, they're gonna run through a lot of different things. They're gonna say, well, it depends on your income level. How much do you make? It's gonna depend on your, the property you wanna purchase. How much are you hoping to spend, right? So if maybe you qualify income-wise, only qualify for a certain level of house with a certain down payment, well, you can buy a bigger house if you put more down, right? Because you're only really, what the lender's looking at is how much can you borrow. And there's a certain amount based on your income, called a debt to income ratio, that you'll be able to borrow. And so if you're somebody that says, well, I want to buy an $800,000 house, but I only make $60,000 a year and I want to put 3% down, I'm going to tell you, probably not going to happen. But if you're somebody that wants to buy a $300,000 condo or house and you're going to put down 3% and that's your income, you might be able to make it work. And so the first step in kind of understanding your own situation is going to be talking to a mortgage professional. That's always my recommendation. I can give advice on the process and the strategy and things like that. But when it comes to the numbers, you want to talk to somebody that's actually going to be giving you a home loan, because they're the ones that are going to be able to give you all the details pertinent to your situation, specific to the financing piece. So my first thought there would be definitely talk to a mortgage professional. I think the second thought or advice would be just the idea of a down payment. I think a lot of people are concerned about private mortgage insurance. Rightfully so. It can be an unnecessary cost on a monthly basis. You can also pay it off up front. There are some different ways to restructure that, maybe even take on a higher interest rate, not have it. I personally just got private mortgage insurance off of my loan. I put 10% down, so this is just a personal story. The reason we put 10% down wasn't because we couldn't put more, but we wanted to have flexibility. We didn't want to put all of our savings into the home. We wanted to have a good, healthy emergency fund. We wanted to be able to put some money in the stock market and do other things with it. So you'll have to analyze your own situation as far as the down payment goes, but I wouldn't be scared of the mortgage insurance. Yeah, it might be a few $100 a month, but after a few years, you can get it off, and there's some different ways that you can go about doing that. That's a topic for a different video. But private mortgage insurance isn't the devil. It's not the worst thing that could happen to you. And then the third thing would be, as a buyer, when you put less down, you're actually leveraging your money more and essentially getting more of a return on your investment. Now, of course, you want to leverage smart. You want to make sure that you can afford your mortgage. What if something happens? Do you have an emergency fund? Are you going to be able to make the payments? Are you planning to be here for a long time? Or are you going to have to sell it in a year when the market's down? I mean, there's so many different questions to consider, because the less you put down, the more you have leveraged, and if the market goes down, now you're underwater. So there are so many different factors to consider. But as a buyer, you're going to essentially see a greater return on your investment when you put less down than more. So being able to put less down is almost a blessing in disguise. It makes you the smarter one of all of us, I guess. But at the same time, you have to be wise and consider the costs, right? What are the worst case outcomes? Now, as far as how much do people actually put down, I see on a regular basis people putting down 3%. I see people putting down 5%. See people putting down 10%. And yeah, I see people putting down more. I see people putting down 20, 25, 30, 50 cash. But most people are going to be putting down somewhere in that, I'd say, 5 to 10% for a first-time home buyer. Rarely do I see a first-time home buyer that comes in with 20 to 25%, unless it was gifted to them by a family member or they got in early at some company and got a big payout in stocks. So it's not common to see somebody put that much down on their first home purchase. You can, and you can work on saving for that. What I've seen in the Seattle market is a lot of times it's counterproductive, or it has been counterproductive, to be trying to save up that extra 5 to 10% to make that 20% down payment, when it would have been better to just get in and buy your house for $100,000 less and not have to pay an extra $100,000, to get your house. So a lot of people have seen a benefit by putting less down and getting in now versus waiting and maybe not being able to catch up. And I know some people that aren't able to buy now because they waited. And so those are just different things to think about. So in summary, most people, including myself, put down 5 to 10% on their first home purchase. You're also better leveraged and able to actually see a greater return on your investment when you put less down. PMI, private mortgage insurance, is not the devil. It's not the end of the world. And lastly here, definitely talk to a mortgage professional about your individual situation. Thanks so much for watching my video on down payments. I know that you found this video valuable, so please subscribe to my channel. And if you know somebody else that could benefit from this information, please consider sharing it and helping me get the word out. Bye for now.